Good morning. It's May 9th, 2022. Pre-market action. This is Jeffrey Cohen, investment advisor representative with Chicago Quantum, here to talk about the markets. So, the futures are down significantly today. And this is Yahoo Finance. You can see the Russell's down. Let's blow this up. Nice, you can see it. The Russell is down 1.91%. The Dow is down 1.16%. S&P futures down 1.5%. Russell's down 1.3%. Why we talk about this? Well, bond futures, the 30-year and the 10-year are down. The 5 years up. 2 years are up, which is interesting because it means we're steepening the yield curve. Gold is down. Silver's down, which for us is surprising. We think that silver is a good play on the market in terms of both economy and precious metals. And when silver's down, it gets me a little nervous. Copper's down, almost 3%. Very interesting. That's a bet on recession right there globally. There's your trigger. So if we also go to Finviz, by the way, thank you Finviz for giving all this information for free. We appreciate it. It's a lot what we do. So you see the market's also down. Their numbers are slightly different. Nasdaq's down almost 2%, 1.9%. Nikkei dropped last night, 2.3%. The European stocks, down 2%. The VIX is up to 3230. That's high. Anything above 30 on the VIX is high. 3230 is very high. I'm nervous when I see the VIX up that high. That confirms that the market maybe not just a head fake, maybe really down for a reason. US dollar is down, which actually is bullish for the stock market. And so, who knows, right? Crude oil, West Texas Intermediate at 107.24 is a very high number. Natural gas at 8 is a very high number. So inflation, prices keep being elevated because of energy prices and supply shocks. So So where are we with this market, right? Everyone is talking. So when I look at my Twitter feed, by the way, this is my Twitter feed. I've got a lot of people I follow on Twitter. And so this is a guy who doesn't trade much, but people like him. Let's be honest, the correction is warranted. Black Monday is here. Buckle up, Buttercup. There's going to be a blow up, right? All these people are so negative, and so everyone wants the market to go up. There's just a lot of negativity. Although you do have your memers. Your memers are still out there. They're still pushing, right? So the Fed put is gone. Just I don't see it as much here. We pumped too much liquidity in the market. Futures slapped down again. Yeah, there were some other... So this person is a perma bear, right? 40-40 for the S&P. So let's see how brave. It's opening at 40.55. Not that brave. So these are people that are investing a lot of money in puts. Now my guess is that the implied volatility or the cost of the puts is very expensive. So people are betting the market's going to drop. Let's take a look at the three exchanges that we like to look at. So there's the S&P 500. And if we look at the full screen, it's funny, right? Because 4750, 4800, that was crazy. We called 4400 to be a top. 4400 and change, 4500 and change, and so now it's down to 4000. So the difference between 4800 and 4800, about 20%, is just a normal drawdown. We look at our stocks and we think, 20%, right? Shit happens. So the question becomes, if we look at the market out for a week, then we see the market has been climbing relentlessly up. We had a hiccup towards the end of 2021. We had a hiccup right at the end of 2021. We've had a hiccup which recovered in early 2022, and now you have 1, 2, 3, 4, 5, 6 weeks down. You're in your 6th week. So 5 weeks down in your 6 weeks. So the question is, where are we, right? Is this a down market? Has the trend confirmed lower? Now, I will say, it's not pretty when the market drops for 5 weeks. I'm still not sure you call it. I think there's a good chance that it might reverse. I don't think you call this a reversal yet. And so if you're in the market, I say maybe you dial back some of your long bets, but I don't know that I'd pull anything out. Right now, if you were smart and you pulled out at 4,800, hey, good for you, right? Even if you pulled out at 4,500. Now you're kind of along for the ride. So what did our model tell us? So if we look at our website, we just updated a few things. We just added positive and negative skew stocks. So what is a positive skew? What is a negative skew? A positive skew is when you look at a normal distribution around daily market returns of a stock. So let's say a stock on average goes up 0.1% every day for 250 trading days. So it goes up 25% for the year. And you're looking at it thinking, all right, well, every day it goes up 0.1. That makes sense, right? So positive skew says, if I look at the stocks, it is more likely to have a return that is greater than the average than less than the average. So it is more likely, it is more common. The median return is positive. Well, wow, that means I'm going to have more good days than bad days. It doesn't mean it goes up anymore, but more good days than bad days. And then there's negative skew, which is just the opposite, right? It's going to have bad days. The median return of the dailies is negative or is less than the average mean. So some common things you think here are Netflix, AT&T. Those are negative skew stocks. LZ, which is like a legal Zoom, right? TDoc, TechDoc. So that's fine. Now, so your positive, your negative skews are these like dog stocks, like Netflix, AT&T, TDoc, LegalZoom. The positive skew, they're the ones LWLG. So LWLG is a memed stock that is highly volatile, but people love to play it. There's people that probably pay their mortgage on stocks like LWLG, just trading them up and down. So they have positive skews. They have good days, right? Hut 8 is another one. Very volatile. Not a lot of direction. I guess when it runs fast. And when it falls, it falls faster, but it falls less often. So that was new in our model. The other thing, I'm going to show you some daily insights. This is important, right? You're looking at the market. You're not sure what to do. The market is blood red, right? And you're probably thinking to yourself, I better run for the exits before I get trampled like everybody else. Look at that VIX. There is stress and there is anxiety in this market, okay? So you don't know what to do, right? Oh, I don't know what to do. You've looked at the S&P 500, like we just did, and you thought, God, I'd love to buy that dip, especially if it goes to 4,000. You know, it hasn't been that low, 4,000 since March of last year. It's been a year, right? This thing has given back a year's worth of gains. I'm probably feeling pretty good about that, right? You may want to go back more years. You may want to say, I'm going to go all the way back to where the 2000. I'm going to go all the way back to where the market was in 2016. Well, God bless you. If the market drops to 2000 and you have the patience to wait, then you're buying this thing at an amazing discount, right? I guess if you go back far enough, you could say, I'm going to wait till the market's at 1000, which is the price, post 2008 crash. So it's a numbers game. You don't know what to do, right? So one thing I can tell you is if you think the market's going to go up in the short term, then The Chicago Quantum Net Score has a series of very high beta, so market momentum driven stocks that have slightly less risk than the S&P 500. So you can get a juiced up set of returns at a lower risk than the S&P 500. Now that's great, right? Now if the market goes up, you're going to be flying high. You're going to be buying that new Camaro. If the market goes down, you're riding beta lower, right? You're riding a multiple lower. Now there's a stock like that, TNA, which is a small cap racer, basically. It's a 3 times bull small cap. So one of the stocks we did not look at, I have so many things I can talk about, but the market opens in 25 minutes, and so we're not going to waste too much time here. Let's take a look at the Russell. This is the Russell 2000. These are the small cap index, right? We look at the weekly on this one, and this is where it gets interesting. So the weekly's been running like 1,500 forever, right? 1,500 is the magic number. It popped over 2,000 in the year 2000, 2021, and I don't know, felt good, right? You know, interest rates were low, small caps were going to race ahead. Maybe it's because of Amazon and Alibaba Web Services and Google Web Services and IBM and Microsoft and maybe all these software companies, right? And Etsy. Now I can sell on Etsy and I can sell on eBay and I can sell on Amazon. So small caps had an edge, right? Work from home. I don't have to have an office. Great. But here's the thing. The small cap rally, in terms of weeks, was 1, 2, 3, 4, 5, 6, 7, 8, 1 down, 9, 10, 11, 2 downs, 12, 13. It was a 13-week rally. So a 13 weeks. So it was a whole quarter where small caps went up. And we have been flat since February 2021 to February 2020 or January 2021, 11 months. And now we've been tracing lower. We traced down to 2,000. We're tracing down to 1,800. You can see we're at 1813, right? So it wouldn't surprise me if the Russell came back down to 1,500 because historically that seems to be the comfort level. It's just what it is, right? It's a numbers game. And so, but if you think that the Russell 2000 is going to pop higher, if you think that there's some good news out in the market, then a really good stock for you to hold on those days when you think it's going to go up is the TNA. So the TNA pre-market is down 4%. This thing is like going to a racetrack. It's amazing, right? I mean, I don't know that you'd ever buy this for the long haul, but look at that. If you rode it up, after a while it stopped going up, and then you rode it back down, and so it's down 60% from the high. So it's interesting, right? You can have a bet on the market that is actually risk advantageous for you, which is TNA. TNA is very risk advantageous. It's actually better than the S&P 500 in terms of our Chicago Quantum Net Score risk reward trade-off. All right, so let's go back. So, well, what else can I show you? So if you go to our website and you go to research today's insights, you see, I was up at 5 in the morning updating the website. So the S&P 500 has been down 0.5% over the past year versus the average closing price of the last year, because who knows when you bought it. The Russell's down 17%. The NASDAQ QQQ, the ETF, is down 6.25%. I talk about variance for those who understand it. For those who don't worry about it. 668 stocks had net income less than zero. We're up to $500 million of market cap because I don't want to be sharing with you stocks that could be getting memed and manipulated in this market. Positive beta, and they pass data validation. They traded every day for a year. Okay, so I talk about TNA. I talk about the most efficient stocks. I talk about the least efficient stocks. I talk about dividend payers. I talk about money losers who have fallen in price. If you're a bottom fisher, if you like to buy $1 worth of stocks for 30 cents or less, here's your list. You might actually just think they can't go lower, right? Money losing stocks that have risen in price. So these are the stocks that are bucking the trends. They have strength. They're losing money, and yet the price is going up like crazy. A lot of oil, gas, and midstream. There's a REIT in there. Take a look. These are low volume names. Volume's down at least 63% on Friday, which was kind of a crazy day. And then here's your high volume names. So lots to pick from in the high volume game in terms of negative net income. Lyft, Dash, Wayfair. These are not all small caps, right? Now we look at the uprun. 1,966 stocks. There's more companies have stocks listed on the S&P 500 that made money than lost money. Now what is interesting, full stop. If this ratio shifts, if more and more companies start to lose money and not be profitable, the whole market's in jeopardy. Because less profitable stocks, negative profit stocks, have much higher risk and much higher expected return. So it's beautiful when companies make money. When they make money, the stocks settle down. Everyone's more comfortable. They bid the price up, more comfort. It's when companies start to lose money. So interest rates go up, cost of debt goes up, supply shocks go up, inflation goes up, cost of goods sold go up, labor prices go up, right? If we see net income fall, all bets are off. And my guess, if I had to put my intuition on it, is that the smart people in the ivory towers are thinking that profits are going down. And that's why equity prices have to go down so that expected returns can go up and I can be compensated for taking the risk of investing in companies that lose money. That's it. It's a net income game, okay? So your most efficient stocks in the market are these. Take a look. What you're going to notice is that our model is picking really large cap stocks as being the most efficient. Wow. Hey. Nvidia. Microsoft. Google. Both flavors. Ameriprise Financial. Apple, BlackRock, Synopsys, Broadcom, T. Rowe Price, and Blackstone. These are big stocks. So what it's saying is, if you like to buy dips and sell rips, to quote the FinTwit people, then you want to buy the dips in these large, high-quality, profitable stocks. I don't know, just say I'm crazy. Your least efficient stocks, these are the ones that have either been going up or going down. They've been moving. They're crazy. It's your chance, right? Some of these stocks are like so memed, I can't even take it. Hut 8, Troops, NetEgg. ARQQ is a UK quantum security company. MTMT used to be Aerocentury. U1 is it's a black minority-owned firm that got a really advantageous contract. I don't remember where it was. Maybe it was South Carolina to open up a casino. They had no experience on casinos, but I think they won it because they were advantaged. You've got coal, right? So you got BTU. You're going to see Arch later on. Those are just always interesting. Equos is a restructuring out of Singapore, which I think is crazy. GGE is a Green Giant, not the food company, but the crazy meme stock. And there's others. There's U1K. Just weird. So if you're looking for stocks to do due diligence on and possibly make your next, killing on, your least efficient stocks are the stocks that, generally speaking, we don't recommend you own or maybe short. Your most efficient stocks, we do recommend that you own or go long. At least our model does, right? Stocks that have declined the most from this year's average price, these are your discounts. This is your Dollar Tree right here, okay? So I don't know that any of these I want to buy. And there's a couple typos. but that's good. You got this. Stocks that have advanced the most. These are the stocks up. Now, Forge, F-R-G-E, is memed. It's crazy. Walk away. But Arch is in there, right? Coal. There's a lot of oil and gas in there. It's so interesting. So here's something about our model. Our heuristic solvers found the most efficient portfolio, and they reached equilibrium on it. And they ran for like an hour, banging away at the most efficient portfolio and didn't find anything better. It's a small edge. It's 4.5 times 10 to the negative 4 edge today at market open. But that's not bad. You want that edge. You want that edge. And by the way, you get the same edge with a 25 stock portfolio. So there is an 8 stock portfolio, and it's all the way like 8, 9, 10, 11, 12, all the way up to 25 stocks. So depending on your risk tolerance and the types of stocks you want to own, there are a group of portfolios that are highly efficient, stocks that zigs and zag, positive, negative correlations. Oh my God, I am getting the best risk-return trade-off with tons of market beta or tons of momentum. So if I think the market's going to go up, these are stocks you want to hold to gain beta exposure. Let's say you think the market's going to go down. Let's say you want negative beta, right? So we found a couple negative beta stocks, BTOG, IHS, K, and Newmont Mining. But if you want real negative beta, not just a couple of stocks, you can hold physical gold ETF. You can hold the US dollar. I told you, these are classical, slightly negative correlated to the stock market. You're going to see it in the futures. VIX, well, we're going to talk about VIX. VIX is crazy in terms of negative correlation. But the US dollar down slightly, markets are down. That's a contrarian indicator right there. The other one is gold. So gold is down slightly, market's down slightly. So that's why today I say the market's a little off. But your VIX is a significant negative indicator. So the VIX is up to 32, 35. Look at that. It's reaching highs that we haven't seen in a year. Run! This says that people are buying puts like crazy. Or more to the point, it's not that they're buying puts, it's that the price of the puts are high. The price of market insurance is through the roof. Smart money, dumb money, all money. Who's buying it? Commercial hedgers. Large traders are actually betting against the VIX. And small traders, doesn't really matter, kind of in the middle. So there are people that are betting against, that are long VIX futures, right? So they are not shorting the VIX to bet for the market. They are long the VIX. So if the market goes up, no, I think I said that completely wrong. I'm sorry. Take a step back. Commercial hedgers are long VIX. Long VIX equals short market. So, commercial hedgers are long the VIX. They're hedging against their portfolios. Because if their clients' portfolios fall, they need to make it up somewhere. And this is pretty effective. Large traders are actually betting against the VIX and are actually long the market. It's another way of betting long without taking any specific company risks. So the UVIXI and the VIXI have amazingly negative beta on the order of 400%, 600%. And then we show the list of stocks that had high dividends. So going back to where we are, I got up at 5 this morning and I shared with you the run. The only thing I didn't share are the stocks that you should be invested in right now to take advantage of the market open if the market opens up. And the reason is, I don't know that you want to be long this market right now. I don't. I did share with you the markets, the stocks that are the worst, the least efficient money-losing stocks. So LWLG and ZY and these others. So if we look at LWLG, so the TNA you can see is still down pre-market. That is the one that bets that the market small caps are going to go up. LWLG, Lightwave Logic, does not make a profit, has a market cap of something on the order of $1 billion. And you can see this thing fell from 20 to get away from here. Fell from 20 to 7 and has been trying to make its way up. You can see how it reaches high every day. So I don't know if that's good or not, right? But it's at 11 now. 11.02, right? Pre-market's gonna go down a little. This is a stock where it looks like every single day people are making 5 or 10% of their trades if you bet it right. We're losing 5 or 10% of their trades if you bet it wrong, and pretty flat. And so our model does not like this stock because it moves too much without any real sense of direction. So there are stocks that we shared on our website that maybe you shouldn't be buying. And then the stocks that you should be buying, we're hanging on to, right? You can give us a call. You could buy the run. I do want to say this. So the market's opening in 10 minutes. I'm going to ask you a favor. If you like this video, I'm going to ask you a favor. Go to the YouTube video. Go to any of our YouTube videos, right? Take a look. Throw a comment in. Throw a video comment in. The reason I ask you to do that is it really helps us. It helps us if you throw a comment, right? Got a lot of videos there, not a lot of comments, not a lot of views, right? That's okay, because the people that really want to watch, I know you're out there. Some of our older videos have like 8,000, 5,000, 4,000 views. And so what I'll ask is, drop a comment. I'll respond. I love to communicate that way. And if you like the videos, subscribe. Hit the red button. That's the subscriber button. Really helps us out a lot. And so now with 8 minutes open, let's open up for questions. AMA. Ask me anything. Who's out there? What do you got? All right, we're going to go back to the futures. I'm going to watch. See if anyone's got anything for us. And so again, drop a comment below. Really helps us. Hit the subscribe button. Maybe shoot us a tweet. We do tweet often. And it's funny to watch everyone talk, right? So one of the things that I realize is there are really smart traders out there that share advice. And there are really smart traders out there that are using FinTwit to profit. And there's just all different kinds of opinions out there. Never follow FinTwit. Don't follow what other people say with a throwaway comment. But for people that provide data, and rich content, you subscribe or you follow them. So that's interesting for us. I would say the market is extremely bearish on Twitter, which sometimes is actually good for the market. And so one last thing to share. This is actually important for those that are out there. Got a few moments left. 19% of stocks are above the simple moving average for the last 50 trading days, which is 2.5 months. 20% of stocks are above the simple moving average for 200 days. We use simple moving average for all of our stuff, so I get it. And so if you bought a stock and you bought it about a year ago, the odds are 80% that you're down. If you bought a stock 2.5 months ago, the odds are 81% that you're down. So your stocks are down. So what are you going to do about it, right? What I say is, don't panic. I'll tell you when to panic. You panic when the stock market goes down really fast for a good reason. Right now, the market's not really going down. I went to news. I like to go to news every day. And I try to take a look at the headlines, and I say, all right, what are the headlines? Is there anything in there? Well, crypto expert Warren pushing back against Bitcoin, okay? A bet on Bitcoin is put to the test. Oh, the Fed is confident inflation can come down, but without some pain. You know what that sounds like? That sounds like, hey, you should work at your marriage. Hard work pays off. There's no news. Home affordability will be a problem. So the market is crashing. The market's down 2%. Okay? Where are we? Look at those reds. Okay? I should be seeing news. Blood on the street kind of news. Where's the news? Russian crude keeps flowing. Exelon stock gains. There's no news. Where's the news? Right? CNN. Is there any news on CNN? Did something happen? Russian leader falsely accuses the West of leaving him no choice but to invade Ukraine, pledges help for families of soldiers killed in the war. That's not news. An American woman who got sick at a resort is in the hospital now. Okay. What's the news? Oh, Wordle drops a word. Okay. There's no news. Where's the news, Jeffrey? Why is the stock market down? So you know what I say to you? If you're out there and you're investing, this may be a good time to be catching up on your novels that you read and making your list of stocks to buy. We have a list of stocks. We like them. We have a bunch of stocks that we're invested in now, and we have our efficient portfolios. But what our model said to you and what I shared for free is that right now, our model is very excited about large cap stocks like Nvidia, Microsoft, Google, Apple, Ameriprise, BlackRock, Blackstone, T. Rowe Price, I can't believe it, Broadcom, big QQQs and big money managers. Okay? That's it. Jump on out there if you like it. This is the time. Oh, and Carlyle Group. So there's some good stocks out there. These are not scary names. These are money managers, and these are large tech, right? Or in other words, you could buy some money managers, and you could just buy QQQ and ride it out. I'm not going to say the market's going to go up or down today. Who knows? But so good luck in the markets today. Again, if you liked the video, hit the subscribe button and leave a comment below. Thanks so much. Thanks for watching. Bye-bye now.